The biggest problem in business and investing? Money. You want to do it, but you don't have the money to do it. And so how do you get it? Where do you go to get the capital that you need to invest in self-storage? Financing, getting investment to buy properties that you don't have is traditional. That is how 99% of everyone invests in commercial real estate and self-storage. Now, if you've never done it, that may seem very daunting, even if you're in the game, but you're trying to expand. The reason is banking investments can seem overly complex. We want to simplify this to you, explain to you how you go out and get money to invest in your first deal or expand your already investment strategy. All right, let's set this up right. First of all, in order to buy a self-storage facility or any investment property, you need to pay the owner money for the asset. Now, it doesn't mean you have the money. As you see in business and investing, there's two ways that you can get capital to buy and to start. First, we have our actual investment money that needs to go into it, as in not a bank or financing loan. This is called equity and the capital that you're buying and putting into it. This is also referred to as a down payment, like if you were buying a house. This can either come from you or how most people do it, 90+% of everyone, they get investors or friends and family. Now, this can range from being 10% of the total value of a property to up as 50%. We're going to explain why, when this happens, and how you can get loans even with little money down. And if you don't have money, you can get from investors. The second half of this is the actual loan itself to buy the property. So when you want to buy a property and go get financing, you need to work with financial institutions like banks. This can be a very daunting thing for people, especially starting out, but it doesn't need to be. So let's start out and go over what the products are and what that means. Meaning, what's the difference between an SBA loan, a conventional loan, a construction loan, and what does that look like? What are the pros and cons? Now, I understand you may not know how it all works, or you're afraid to get a no. We're going to walk through and explain how you talk to financial institutions, what products they have to offer, because there's lots of them, and they don't all do self-storage, and they're not all operating in certain regions of the country, and they may not be right for you. And that's fine. In fact, that's okay. When we go out to get a loan, we're told no routinely. In fact, that's part of it, because we know and understand there are differences in banks, timing, what we need, what the asset needs, what they know, and what their comfort level is, as well as ours. There's two main parts that we're looking for: the total amount of capital and then the terms. So if I have a property that was, let's use simple math, $100,000, and I'm gonna put $20,000 down. That means I'm getting a loan for $80,000. Now the loan, that money part, that capital part, is part of it. But the second part, to me, is actually way more important, and that's the terms. Now, the terms of the loan may be things like, how long does that loan last? And how much am I paying for that money? As in an interest rate. That also has things like conditions, and can I prepay? And all sorts of other things. Now, here's the difference in self-storage and commercial real estate investing than, let's say, your house. A lot of this is dependent on the asset, not nearly as much on you. That's why when we're looking at these two sides, the terms and how much you get down will vary from institution to institution. This has a lot to do with how the bank is set up and what they invest in. When we are talking about financial institutions, we're looking for people that understand self-storage. Why? Because self-storage, or the asset, is a large piece of why they're going to give you the money. Is it a good deal or a bad deal? The less they understand that, the more it's going to be predicated solely on you. We also are looking for an institution that can be a partner and somebody that we can work with. And a lot of people don't understand this about banking. They expect that I either can get a loan or I can't. And the person that's giving me the loan, it's a one-sided relationship. We don't feel that way. In fact, some financial institutions are really good to work with, and they know a lot about the asset class. They actually will help us figure out the right terms and how to invest in this local area, the capital needs, and they know what they're doing when it comes to underwriting. They've seen it and they work with different types of people. That may be everyone from an institution that invests to someone that's never invested in their entire life. So in order to break this down so you can understand what options you have, we wanted to bring in, and you hear it straight from them, and one of our partners, which is Live Oak Bank. We love Live Oak Bank. The main reason is because they understand self-storage, and their terms, the capital, the ease of use is amazing. They are customer service centric. That's why we asked them to come on and help us explain things like a small business loan, which they are experts in. In fact, that's how their bank got started. It was all around small business loans. I love this. And for anybody that knows and listens to the podcast or our material understands that to me, self-storage is a business, not a real estate asset. So to break that down, I've asked Anna from Live Oak Bank to come in and talk to you and explain to you these different products and how they work for you.
I'm Anna Taylor. I'm the head of self-storage lending at Live Oak Bank. For the past almost 10 years, I focused exclusively on helping people buy, build, expand self-storage facilities. So when you're looking to finance a self-storage project, you have essentially two options. At Live Oak, we offer both conventional and SBA loans in the self-storage industry. SBA loans are very flexible in size. You can get an SBA loan for as little as $50,000 all the way up to financing projects that are $10 million plus. Work with the lender to understand which SBA loan product you're using, as they have different limits and max loan amounts. With an SBA loan, it's not just for acquisitions. You can use an SBA loan to develop a self-storage facility from the ground up, do a conversion, or add on to an existing facility. You can even refinance debt as well. So a lot of people often ask me, how long does it take? I've heard an SBA loan takes a long time to close. Typically, if we have a complete application, we can close in 60 days. However, keep in mind that the biggest driver for how quickly your loan can close is you. So when your lender asks for items in an application or sends out a needs list for closing, the faster you get those items back to your lender, the faster you can close. An SBA loan will have traditional closing costs just like a conventional loan. That would be an appraisal, environmental report, legal fees to draw up the loan documents, and title work. SBA loans have something called a guarantee fee. There's actually zero fees for loans under $1 million, and then after that, it's a graduated fee based on the loan amount. The larger the loan amount you have, the larger the fee will be. At Live Oak, we're self-storage specialists, and that includes the underwriters as well. They've looked at tons of self-storage projects and are happy to give you feedback on your projections or your take on the facility's success. So if you want to be ready when you find the right property, here are some tips for getting through the application process quickly. Have your personal tax returns in PDF format on your computer. That way, when you find the property, you have them ready to send. Also, keep all of your financial information ready and handy so that you can easily complete a personal financial statement. Overall, SBA loan is a great option if you're looking to get into self-storage. At Live Oak, we've helped literally hundreds of people get into the self-storage industry via a loan from us. So if you feel like you're ready to buy your own self-storage facility and don't know how to get started, feel free to reach out to me. I can connect you with a dedicated self-storage lender who's happy to talk about your goals within the industry. Conventional loans are typically for stronger guarantors who have more experience within the industry. A lot of our conventional customers are large owners, even all the way up to institutional level players and large self-storage funds. The process between a conventional loan and an SBA loan is pretty much the same. We're going to require a lot of the same things. It's just we don't have to follow all of the SBA rules when we're looking at a conventional loan. So we have a little bit more flexibility in terms of setting the terms of the loan. So I actually really like SBA loans in the self-storage industry. At Live Oak, we're actually the largest SBA lender in the country by dollar volume. And we have a group of lenders here at Live Oak that focus exclusively on self-storage entrepreneurs. The reason that I like SBA loans is that a lot of people that call me are people that are not in the industry yet. And this is what they're hearing when they talk to their local bank. Okay, we'll give you a self-storage loan, but you already have to have self-storage experience. So at some point it becomes, well, if I want to get into the industry, how am I going to get a loan? The SBA loan is great for this. It has a 25-year amortization and term, which means there are no balloons. Similarly, with an SBA loan, there's no restrictive covenants. So that means essentially once your loan is approved, the only reason that a bank can call the loan is through non-payment. And you can also build working capital into the loan. Working capital can be used for things like capital expenditures, adding new features to your self-storage facility, and just general working capital that may be used to help make payments until the facility's cash flow grows a little bit under your ownership. The most exciting part of my job is working with my customers, and there's no typical self-storage customer. Most of my customers are probably people like you that may have other forms of income. I've worked with people that are doctors that are getting into self-storage, accountants, sales managers. Maybe they have a 9-to-5 job but are looking to supplement their income. I've even had people that were NASCAR drivers and yoga instructors. It really runs the gamut of who I'm going to talk to on any given day. And that's what makes my job a lot of fun. So when it comes to an SBA loan, I like to say that you really have to qualify on 2 different fronts. We have to find a good project that pencils out and will be profitable for the customer, but we also have to find guarantors that are A, eligible for an SBA loan, and B, meet our own bank-wide requirements. So what does it mean to be a good project? Essentially, if you're looking at buying a business, we'll take a look at how the facility is doing now using the seller's financial information, but we'll also look at what you think the facility can do via projections. We'll then take into account, okay, what is the purchase price? How much are you able to put down? And then we'll figure out, with us financing the rest, the most important thing that we're going to look at is this going to be something that is going to be profitable for you? And we're okay to get there on projections. It's okay if the seller's numbers aren't that great. We understand that you might have found a diamond in the rough that maybe doesn't look so great today, but with some changes could really be something special. So we're very comfortable underwriting on projections so long as those projections make sense. We've looked at thousands of financial statements for self-storage facilities. If you're going to show me projections and can support those changes, we'll stand behind you. If you're going to quadruple NOI overnight and operate at a margin we know is not really typical in self-storage, we're probably going to tell you to go back to the drawing board. So once we've determined that we've got a good facility, we need to make sure that we've got good guarantors as well. There's some high-level eligibility items directly from the SBA. Number 1, you have to be a U.S. citizen to get an SBA loan. You can have a partner that is not a U.S. citizen, but we need to show that at least 51% of the ownership of the storage facility is in the hands of U.S. citizens. Secondly, you cannot have defaulted on any government debt in the past to be eligible for an SBA loan until that debt has been made whole. So those are the big ticket items, but then we have more specific Live Oak requirements. Typically, we want to see someone who's got a really strong credit score with no major delinquencies in the past. Also, we don't like previous personal bankruptcy. So if that's something that's applicable to you or one of your partners, let's talk about it early to see if we can work through it. We like to see strong outside income as well. We know the storage facility is something that's going to be profitable for you down the road, but we don't want it to have to cover all of your personal obligations right away. So we like to see guarantors that have other sources of income or strong savings that can take care of their mortgage, their car payments, their cost of living, so that we can focus on the self-storage facility just shouldering its own debt. Another thing that we're going to look at is your personal financial statement. I look at those to see, okay, where is the equity coming from? How much are you contributing if you're raising money from investors? And that way I can see how much cash you're going to have left over after the equity injection. This is really important to me as a lender because I never want to totally clean somebody out with the required equity injection. We like to see something we call post-transactional liquidity, which means you've got sufficient personal savings after the transaction goes through. Lastly, we're looking for someone who has a strong plan for success. So I want to see via a business plan why you're excited about this particular opportunity. What partners are you going to have to make this a success? People that are excited about their project and can articulate to me how they're going to make it successful are much better candidates than people that have heard self-storage is easy money, it's mailbox money, etc. It's a great small business, it's got limited management, but it does take a lot of proper attention to make sure that it's run appropriately. So typically I would encourage you to reach out to us early so we can get to know you, go through our guarantor requirements. Once you're officially under contract, the fun begins. That's when we typically send out our loan application. We'll collect documents from the seller and then documents from you, including personal financial statements, tax returns, and other documents to help us understand what you bring to the table as a guarantor. Once you get a complete application, you'll move into underwriting. You'll work with an underwriter who essentially does a deep dive into your project, reviewing your projections, your financial statements, etc. They prepare a really detailed overview of your loan request so that they can submit it to credit to get that final approval. For us at Live Oak, because we're a preferred lender, once we get a complete application, we can have you approved in 2 to 3 weeks and have you closed 60 days from getting that complete application. Keep in mind, we are a preferred lender with the SBA, which means we can approve and fund loans in-house. If you're working with another lender that's using an SBA loan that's not a preferred lender, it may take longer because they have to send it off to the SBA for separate approval. So I hope that was really helpful. Now I think it'd be great to look at 2 real examples of people from the self-storage income community who have used an SBA loan to either buy a self-storage facility or convert an old building to self-storage.
All right, So we're going to look at an actual example of one of our students.
Can he raise the rental rates?
And so rates will just go up and they're going to put future rates.
There's no SBA guarantee fee.
Just make sure that's very clear and shown in the business plan so you're having those discussions up front.
And if you want to stay with us for 25 years, we'd love to have you.